In this second video in our series, we're going to look at a selection of the major changes in property taxation. In particular, we're going to focus on some of the changes that affect those of you with buy-to-let properties. While some of these changes don't come into effect until after April 2017, we're also going to talk about why it's important to look at these now. Firstly, what are the changes? Well, finance charges for higher rate taxpayers are going to be restricted, so you no longer get higher rate tax relief. This only applies to individuals rather than companies. In addition, the wear and tear allowance on furnished buy-to-let properties has been abolished from April 2016, and also there's going to be a 3% additional stamp duty charge on all second homes from the 5th of April 2016. So let's look at these changes in more detail. The restriction in finance costs for buy-to-let properties takes effect from the 5th of April 2017 and is phased in over 4 years. Details of that are shown on the screen. This means that, for example, if you had £20,000 worth of finance costs, by 2021 you could be paying an additional £4,000 worth of tax. Even if you're making losses on your property, you could still have additional tax to pay, even if you're a basic rate taxpayer. It may be that it's beneficial to transfer your buy-to-let property into a limited company. However, there are a number of things to consider before you do that. You have to make sure that the costs of conveyancing the property, any potential capital gains, refinancing the property, and the many other costs associated with transferring from one legal entity to another don't negate the tax saving. There's a very good reason to consider that before the 5th of April 2016, as the additional 3% stamp duty on second homes takes effect from that date. So, for example, transferring a £150,000 property after the 5th of April could cost an additional £4,500 in stamp duty. If we add these changes to the abolition of the wear and tear allowance for furnished buy-to-let properties, there is an awful lot to consider before the 5th of April 2016. In these circumstances, here's what we suggest. Firstly, check what impact the restriction in finance charges is going to have on your tax liabilities over the next few years. Check immediately whether you can transfer your buy-to-let property into a limited company. Review the expenditure you're claiming against your property income to make sure you're claiming all the things that you can claim. And finally, check and see whether your property qualifies as a holiday let, as these are treated differently for tax. I hope you've enjoyed watching this video and you've found it useful. Thank you for watching.